Okay, so they'll hear horror stories, those type of things. It's stuff that's just very miseducated. All right, so I was able to answer his concerns and shut it down, and everything was just perfectly fine after that. Just be mindful that those type of things are always going to come up, okay, with any type of renewals. The biggest things that you always need to find out is always what are all their financial assets, because y'all are always going to come to me, but then also find out what their biggest goal is. Is it growth overall, or is it long-term income? Guys, there's so much stuff that has to do with annuities, and there's a lot of knowledge that's on all the inner workings. Outside of annuities, when you start looking at products-wise, annuities are easier to sell than IULs. A lot easier to sell than IULs. You cannot, if you don't know how to explain IULs, you're not going to be able to sell a single IUL to most people because they just don't understand. Annuities are a lot simpler. Okay. Now, all right. So once you've got to that point, and you've gone through that chart, you've kind of shown them, and I go back over all this stuff with you. I'm just kind of doing a condensed version today. At that point, you're going to book a meeting from the meeting. BAM fam, BAM, book a meeting from a meeting. Okay. Now that right there is very important. Okay. You either need to book an appointment and or schedule a conference call for me to get on. Okay. So after you gathered all the information, some people in here may not know a lot about annuities, but that's where I come to play. Okay. You can have me step in as the annuity specialist. And this right here was probably one of the biggest things that, I help out a lot of other people closing annuities. I never had this in the very beginning. So when I lost a lot of annuities, it was because of these little things that happen in the very middle of annuities that they don't necessarily, nobody tells you about. All this stuff comes up. Anyway, so you gotta go through that learning curve, all right? So what a lot of people do, they'll gather all the information, they'll call me and they'll say, Gerrick, I got a client, XYZ, here's what we got, what can we do for them? What I'll do is I'll put together an illustration, a plan, and we may have a conference call with the client. I always typically like to do that, just so when we go there, I can typically go ahead and do a sell the first time. Now, we'll have a conference call with them, schedule time, and I typically will go back out with most agents. The reason being is because whenever you're caught up in an appointment with the client, there's going to be a lot of questions that are going to come up right then and there about their money, about their retirement accounts. Guys, there's a lot of moving parts whenever it comes to all this. So you have to, and because I could sit here and teach you all day, but until you get to that moment of the client asking you this and asking you that, and if you don't know how to properly respond, it's a lot of money that they're going to be entrusting you in to be able to transfer. And if you don't know the answers to the questions, they're not going to buy into it. Okay, so you can have me there and have a shot, or go by yourself, and then there may not be a good chance, but if you can close it, that's fine. I'll give you as much support as well, whether I go with you or not. Okay. Now, as I go into an appointment with a client with another agent, okay, anything outside of just the role or the in-home presentation, the agent is going to manage. The agent, I allow the agent outside of just the in-home presentation to really take control over everything. Okay. That way I can make sure whenever he goes back out and he starts doing another annuity, he knows exactly the process from A to Z of how to do an annuity, how to complete it, and what's the proper steps. Because there's going to be a lot of things in there that he's going to miss, that he's going to forget, that an insurance company is not going to tell them. Guys, this last transfer that we did, we had to get the paperwork done 3 different times because they kept on telling us the wrong thing. There's always going to be issues. There's always going to be headaches. It's just what they do because they know if we can cause a customer enough issues that's going to want to transfer his money, guess what you're going to do? You should say, F it, stop, I'm done. I'm not even going to mess with it anymore. All right? So it's the things that always happen, okay? So now, but then it just gives you the confidence to be able to do all those things, all right? Now, there's 2 key indicators for retirement funds. So there's going to be, again, a lot of misconstrued information. So the key indicators, the first one is 59.5, all right? So let's say I'm 55 years old, I have $100,000 in a 401k, and I, let's say in a tax bracket wise, I fall into a 22% tax bracket, okay? For those of y'all that do not know your tax brackets, and you expect to do this, you have to understand taxes, and I ain't saying like all the inner workings, what I'm saying is just essential tax information. Tax qualification statuses, tax limits, things like that, okay? typically the majority of the people that we're going to be sitting in fall underneath the 12% tax category for income tax. Okay, so say I have 100,000 in a 401k and I want to take that money out on 55 and a half. Well, people look at that and I see a full 100,000. That's not what actually I could even get. Okay, so I would have to pay, because I'm under 59 and a half, I'm gonna have to pay an additional 10% penalty on my money, and then also I'm gonna have to pay income tax on all that money, right? So now just off of so now I'm down to 68,000 immediately. That's a lot of money. You could roll all that money over to an annuity. You don't lose a single dollar. You don't have to pay any penalties or anything else like that. Okay, so that's a key indicator. Now after 59 and a half, you can take out the money. There's no 10% penalty. And at 70 and a half, the other key indicator is at 70 and a half, where you have to start taking what's called RMDs, the required minimum distributions, which is typically, the rule of thumb is about 4% of your account each and every single year. Okay. So you can, that's only with 401ks or qualified plans that you have to start taking out at 79 and a half. You can roll it over to an annuity to where they don't have to take it out. They can allow the money to sit there and to grow. Okay. Now it's all about finding. Yeah, sorry.
Do you tell the clients that you're sitting in front of what they're going to be paying? Like, so if they were to keep this here, like the same example you just gave, if they were to keep it here, they would lose this much. So instead of like losing that, you transfer that over?
Yeah. So the biggest question I'm gonna ask some guys, this right here is what the stock market looks like. And I always use the statement, guys, the stock market is gonna be the stock market no matter what we do. The stock market is always the stock market no matter what we do. And I love how, these when you, I ain't gonna get into that long discussion. There's so many different routes I can take. But you'll I'm trying not to get on too much of a tangent or off path. So yeah, that's basically it, right? Just ask them, guys, at this point, how much income or how much of your nest egg can you stand to lose if something were to happen? If the stock market were to crash or something like that. It's just creating those painful moments that they don't want to have to deal with, okay? Mm-hmm. Now also, whenever I go back into the home after that conference call, I know what their goals are. So anything that I go into the home and I start talking about, everything is going to be directed to what their goals are. Anything outside of that, I'll always come with a plan B, but they will never see it, just for the simple fact that plan A is almost always going to match what they want. Sometimes I have to resort to a plan B because they can't just do it. Right now, for instance, okay, right now I'm working with a client, wrote over $3,000 in business on final expense for him and his wife, and they need a retirement fund. He's 63 years old. He can only put about $100 a month into a retirement fund. I can do that. We can get that set up with NLG or National Life Group, whatever. He's trying to make up so much ground in the next 6 years that an annuity isn't really the best option for him, right? So you need to be able to be transparent and honest with your clients, because whenever that guy called me and he had those concerns, I told him, I said, Lawrence, I promise you this, that whenever I bring out the annuity, the policy with you, and we sit down and we go over everything, I'm going to make sure I go over every single concern you got. I said, I promise you, if there's a single thing off, I want you to cancel the annuity and you get your money back. So at that point, I'm basically betting on myself that I knew I did my job the way I was supposed to. So when we went back out there, I had everything highlighted, everything marked, and I went over every single concern he had. When I left there was not a single thing in the world that anybody's going to do to cancel that policy. Okay? When you start being more transparent and open with your clients, and they can genuinely trust you, all the money's going to come. Okay, I'm not, I write very good business, and all that business stays on the books. And you're going to learn that once you start throwing business up against a wall to see what sticks, some people have those ways of doing that. Okay, my old company had a guy very close with, and he had submitted like $32,000 in business. Everything was, and I was like, that's good. We were talking one day. He said, man, I only got like 4,000 of that issued out last month. I'm like, what? He said everything was getting declined, people was canceling. I'm like, so that's bad business, okay? When you start doing that, you're gonna ruin your business. Okay, when you start doing that, you are going to ruin your business. Bad, just because it's going to turn into a cancer and it's going to start affecting. It may be on that one specific area of your business. It's going to start affecting everything else. Okay, so just don't throw business up the wall and see what's going to stick. All right. Now, so also, I'm trying to think. Where did I leave off at? We've been on so many places. Oh,
The questions that you're asking in the house in order to pretty much guarantee that.
so whenever we go back in there, I'm going to start using very assumptive questions just in my initial opening whenever we're talking about everything. Guys, I'll say, John, what we're going to be doing today. So say if an agent was sitting here with me and we had a client, I'm going to go ahead and start using all the assumptive statements. John, what we're going to be doing here today is that we're going to be looking at some financial situations for you, see what's going to be the best for you, as long as we can come up with an inevitable goal. So right now we're working on a case with Ashley. Guy has $300,000. He's 60 years old. And he needs to make up another $200,000 within the next 5 years. His goal is $500,000 when he's 65 years old, so he can retire, and that's his goal. Okay, that's his goal. So the simple ways of going about doing something like that, okay, is we have a $300,000 immediately. That's what he at least has right now. Okay, so in my mind, we got 5 years to make up $200,000. Right? So we got 5 years. That's very doable. That's very doable. $40,000 a year. We start breaking down $40,000 a year. Now, what I'm also going to do is I'm also going to get him at least a 10% bonus on all of his money when we roll it over. So now we don't even have $200,000. We have $170,000 to get over the next 5 years. All right. So what does that break down to? 30-something thousand and some change. That's if the account that we set up for him just stays flat and doesn't gain a single dollar. We only have $30,000 to gain now, each and every single year. If the market gains anything over the next couple of years, he only has about $20,000 on average to be able to save to hit his $500,000. So as I'm going through all that, I'm going to be using those statements. John, if we can achieve your overall goal of getting you to that $500,000 mark by the time of 65, does that make a better financial? Does that make a better financial decision? I make all these statements. Does that make sense? Do you agree with me? Is that fair? Is that right? Because whenever I'm making those statements, and that's my favorite. Is that fair? That's my favorite one. Because reasonable people cannot say no to a reasonable statement, right? They can, but you can always come back at them. And so whenever I always have a client that won't let me in the door, that no, I ain't gonna do anything. I say, listen, I just drove an hour out here. Just give me 5 minutes of your time. Is that fair? I closed a $100,000 annuity. Drove all the way down from Jupiter, all the way down to Wilton Manors? Is that down? Yeah, Wilton Manors. Yeah, it's down here. I don't even know if it's down there. Is it down that way?
It's across. It's across.
Okay. Anyway, I was just saying. But,
down and across. Down and across.
So I drove an hour and 15 minutes at 8 a.m. The appointment was at 8 a.m. They called 9 a.m. They called me and canceled before I even left Jupiter, and I still went because it was a $100,000 annuity. So I'm like, I'm giving myself a chance to make this sale. Drove all the way out to Wilton Manors. The wife answered the door, and she said, "Nope, we ain't doing nothing. We're not moving a single dollar." She had about $500,000 in a 401k in stocks, and he had $100,000. So I said, listen, I just drove an hour and 15 minutes out here. I said, just appease me for 10 minutes. Let me show you what I got for you. And there's nothing that even remotely looks good, I'll be on my way. I just don't want to feel like I drove out here for no reason. Is that fair? She said, yeah. I was in there for 10 minutes. The husband was like, I want to move mine. I don't care what you do with yours. I want to move mine. So it's all about just getting people to open up and say, okay, yeah, you can. If you can buy yourself an inch, you can buy yourself a foot in this business. We're just dealing with regular people. Regular people have regular concerns, and as long as you don't become that person from a lot of those other agencies that try to be manipulative or conniving, I'll tell you this, I know for a fact I have left thousands and thousands and thousands of dollars on the table just because I did do some slimy stuff, or I didn't throw a bunch of business up against a wall to see what sticks. Because personally, I don't have time, nor the want to keep up with a bunch of bad business that I got to follow up with and track them down. I just don't have time for it. Okay, once you start understanding that the quality of your business is more important than just the quantity, you're going to be in a profitable business. Also, it's an old saying I love: the quality of your questions is going to determine the quality of your pay. Because it's just like that old Dr. Seuss saying, right? People don't really care how much you know until they know how much you care. That's exactly what the clients are wanting for. And that's why I say, like, if I ever find out about a retirement fund, I'd never speak about it again until the very end, and we're closing. reason being is because I'm not trying to come in there for final expense sale. 8 minutes later, now I'm going after a retirement account. People hate that. They're going to step back and they're not even going to do business with you. Does that make sense? Is that fair? Has anybody got any questions, comments, concerns, anything like that?
Earlier you mentioned that the paperwork was very it takes like a month to go through, right?
All right.
How are you preparing your clients to understand that there's going to be a long time?
Most of the time, there's not going to be a huge long process. It's just with some companies that there is. So sometimes you can fall apart. Stuff doesn't always go according to plan. Okay, so it's all about how you set this stuff up in the very beginning to make sure that the client they know that there's going to be problems. They know that there's going to be issues. There's going to be hiccups. There's going to be transfer paperwork problems. But I allow you to dictate all those things. So maybe the next time you need a little bit of my help, but very little, and then after that you're able to kind of dictate things on your own. Does that make sense?